Hi guys, welcome to this channel. Now I will share about what is interest. For supporting this channel, please like, comment, and subscribe. Unless you have a degree in finance, you probably don't know all that you need to know in order to be an informed, responsible credit card user. Now, you don't need to be a finance expert to comprehend the basic corporate in this article. But after reading it, you might feel like one the next time the subject comes up with your CO works, friends, or family. What is interest? If you borrow 5,000 from your grandma and $5,000 from your grandma and promise to pay her back in 6 months, you might return $5,000 to her a year later. Grandma will probably be happy with that because she loves you. She loves you. But if you wanted to borrow $5,000 from a bank, you know you will not get off the hook nearly as easily. The bank will almost definitely expect regular monthly payments and will absolutely expect to be compensated in the form of interest. But compensation for what? So long as you pay back the money. Why should the bank deserve any extra compensation? Interest is first and foremost compensation for what is known as default risk. When you borrow money from the bank, there is a chance you won't pay it back. There's an even greater chance that you won't pay it back in full, or that the bank will spend time and money bugging you about late payments. If not for interest, it will only take one missed payment by one borrower for the bank to lose money. Therefore, the bank must charge interest in order to offset debtors and make a little, or not so little, profit for itself. Otherwise, why be in business? Secondly, interest is charged on loans because the use of money is mutually exclusive. If the bank has only $5,000 in its pool, it can lend $5,000 to you and to your sister. Actually, it can, but how banks are able to do is well beyond the scope of this article. Imagine your friend wanted to borrow $50 from you, but if you lend the money to him, you would be able to take your girlfriend out a fancy dinner. How much compensation will make lending him the money worth it to you? How much will you have to add in to cover his default risk? A third reason that interest must be charged is inflation. If you borrowed $5,000 in 1966 and paid it back in full 40 years later, much of the value of the money will have evaporated. In order to replace the buying for that $5,000 had in 1966, you have to come up with more than 31,000 in 2006 dollars. Inflation is a constant fact of life in America and around the world. So, at the very least, interest must offset it. In recent times, inflation in the US has been hovering around 3% per year. How do credit card companies determine interest rates? Credit card companies exist to make money, and they do this by charging interest and fees. In order to extract the most business possible, They offer different interest rate and fee schedules to different people. In business lingo, this is called price discrimination, but don't bother contacting your lawyer. From this form of discrimination is perfectly legal, if a bit unfair at times. Credit card companies consider your default risk, the cost of lending, taking into account the mutual exclusivity of money use, and inflation expectation in determining the interest rate you will pay. Uh, Obviously, only default risk is unique to you, and it is determined by your credit story. The better your credit, the lower the interest rate you'll be offered. Thank you.